Good morning. Oh, sorry, that wasn't a corona cough. There's a little something in my throat there, I swear. Okay, let's get going. So yesterday morning, the expectation was for a consolidation type of day, maybe even an inside day. Um, Depending on where we look, that's where we got what we got. So the Dow here, it wasn't let's say a complete conviction to the long side. There was some decent rallies. There was some sell-offs. It's coming back at the end of the day. It looked like it could try and pop higher, and then it kind of petered out, and then kind of just went quietly into the close there toward the end. So here we are, just looking with the end of day. We got a little tail on the top and a larger tail on the bottom, but we've got a higher low. So as we look at this bar by bar and seeing what's happening, it really is, when I started calling this market Mr. Schizophrenic sometime last year. And, this pattern of, gapping, it's gap down, of course, greater than 100% retracement. But in the downtrend, it could have kept going. Well, no, bottoming tail bar. Let's think we're going up. Gap down, red bar. Let's go down. Yeah, it went down. No, up, down, up. So now what we see is, give or take within these bars here, we're relatively close to that area, especially with the red bar, this one, and yesterday. And yesterday, it's not a big candle body. We would have preferred one, which was more convincing, where the body was larger and closing near the higher end of the range. So we don't have that, but it's gapping up this morning. Well, let's see where this is trading here. It's down a bit. Yeah, it's gapped up to 210. Right. So a nice size gap, and then back down to 103, which is just into this range, but well above the halfway part of the range. I like this open. We want to lobotomize it. Well, the only way to lobotomize this whole thing would be for it to do it to all of us. I'm not for that. So when we look at the charts, we have to remember we are participants in this schizo action from time to time. Anyway, the reason I like it is that, while it moved higher, it's coming back in. It's not like it's been running higher overnight up into resistance, which would be a much more difficult thing to trade on the long side. And because it's down as much as it is in the short term, it could be difficult on the short side. So, we'll see, maybe a little consolidation, but as it comes down, maybe it fills the gap, down here. It'll be clearer when we look at the futures, since it's already past this level. So when you get a gap, right? So we trade gaps in the morning. What do you do trading gaps? Well, you're either going to get a gap up above resistance, right? And then some sideways action, and it goes. And so you trade some kind of a bullish pattern on the gap that creates support. And this is all part of the gap course, advanced gap. But the other way of doing it, which most gap traders shy away from this because they prefer, I'm not saying what they're saying is wrong, they just prefer the stocks that stay up and then go. Right? They are showing the greater relative strength, but depending on the market environment and at times the stock, they just don't do that. So what you look for is you look to the left, as we always do, and you say, well, what was resistance should become support. And you wait down there and you see if it can hold that area. And this is a little lightly traded, but it's picking up a little bit just to show the concept here. So again, you look to the left and say, hey, these highs, it's coming down there. That's where the buyers will be. And you can see they did show up there. And then they couldn't get it going, and now it's lower. So possibly it needs a complete gap fill, or this starts to go sideways. We still got some time before the open, but it starts to go sideways, and you get a retest area, what we call creating support, and then things could possibly get going. Right? The other scenario is just falls apart and it goes back down to 190, and it's just another crazy day and a down day. Let's hope that doesn't happen, because then it's just a restart again of the bottoming process that was attempted here. And then, it was attempted here and it failed. And now here's a different variation of a bottoming process. Sideways igniting bar, the down shakeout. Now, down V, sideways at resistance. So we'll see if it can gets through here. Back down here, it might give it a shot. Let me tell you, and we did this yesterday in the room where the sell-off occurred, and when it came down and got that climactic buy, I jumped in there. I didn't take full advantage on the way up because of just the gyrations. But anyway, the climactic buy setup could be another setup today. Let's say this does run all the way down here and it comes down to support. We look to the left and hey, we get some kind of bottoming action. Give it a shot, buy it, see how far it goes. Institutions are buying here on the way down. We see the evidence of that with this. There's the slowing momentum. I covered that, I think, in the last two pre-market videos on how we see slowing momentum without indicators, just by looking at the distance between the lows. So I guess, the question is, do we get another inside day? It would be kind of boring, but it would be okay building up more support. Ultimately, by the end of the day, do we get a decent close above these two candles right here? So we'll see how that plays out. Similar story, so at the end of the day yesterday, where everything was setting up, it was at resistance, but it was like, if this was really going to be a bullish day, right, it'll get going. And it attempted to get going. So it was kind of a pretty active for me at the end of the day in YouTube. And it was fun, is that where the Russell was setting up, I thought the best could go higher. So I went long the Russell futures, then I went long the S&P futures, and my initial sell orders triggered and got out of some of the position, and then things started to meander around. I was like, this thing's supposed to keep going. And one of the traders in the room was like, Greg, it's at resistance. I'm going to short the Qs. And I'm like, okay, let's see, how this turns out. And as it meandered around, things just started to jiggle. And I said, this is meandering quite a bit. So I shorted the Dow futures. And ultimately, I killed the others, and the Dow futures trade paid off quite nicely. So overall, it didn't go as expected for me initially, but took advantage of, changing my bias and perspective on what was going on there. Took some profits out of those trades and pared any of the losses to a minimal, and the YM made good money. So sometimes, you have to be, extra nimble. And what I'm explaining is, at the beginning for most traders would be quite a difficult thing to do. And I don't mean to pressing the button. That's easy. To change your belief and bias, your human nature, your ego gets in the way. Could I possibly be wrong? And now I have a trader in the room that's, he's shorting and I'm going long. I'm like, do I want to headbutt my ego with that? I'm like, hell no. I took some money out of the trade. I'll short the hell out of the YM. I hedged it and it wound up falling quite nicely. So, you have to be flexible. What was it? Mark Douglas said something about, I don't know how it went, something about, being tight in one thing, but flexible in another. And anyway, you should read the book. It's a good book. And, it's kind of like as a trader, you can't let your bias get in the way too much when you see evidence of something else beginning to turn the other way. Well, anyway, the spiders are coming down here toward this other support here. We'll see if they can get it turned around. I actually would like to see this 241. I actually would really like to see this hourly chart poke under these lows here and come right back up. I'd love to see the hourly chart have a bottoming tail bar that was a downside shakeout. That would be in a perfect pattern. You're looking using bar by bar analysis to get long, looking for this to come up into that resistance area. So there's an idea, right? Based on what's happening here, break down below the base, and then a move back up again. So I give these different scenarios because I don't know what's going to happen. Right? I see the attempts that have failed. I see the momentum slowing. How the turn actually occurs could happen a lot of different ways. So those that just, kind of give you this, this is the setup, blah, 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 that you're going to do, you're going to be left behind in no man's land trying to fit one kind of a pattern into a market that can do something, I guess, virtually an endless number of ways. So bar by bar analysis is a concept that I created many years ago for that reason, and as well as to, in a sense, keep myself and other traders that I share this with honest in that, look, you think something's going to go in one direction and you start seeing bars that are saying it's not going to happen, it's time to change, right? Go with the flow. All right, so up at resistance here, we're at 182.5. So well above, right? Q showing relative strength again. So while it's coming off of this high, right, it's just in the middle of the range there. So that's going to be a pretty important line in the sand. And look at the distance it is from here. And so where it's at now, we look to the left, it's right on top of that level. And so we'll see. So it is possible maybe the spiders could break down under that low, as I said, since they're a little weaker and this is tighter, where it breaks down and comes back up. And one of the reasons to watch the spiders and the Qs. So maybe the Qs actually don't come down there, and you see the relative strength in the Qs. What often do is kind of drag the S&Ps along with it, or at least stop it from going down very much. 106.5. Yeah, actually, right, holding up relatively well. So this is what we'll have to keep an eye on with this halfway bullish to neutral gap down. Transports, they even stabilized, good sign. And we'll get to SPX. So here we have the futures, and we can see a little bit of what's going on. And you can see, it holding, taking out the high, as we saw on the spiders, and now it's back down. The question is, can it get going, right? As we've been talking here, can it get going? Here's the hourly chart. It broke out, a reasonable retracement. And, as we look at the 5, can we see if the 5 now can start to flatten out? Right? So as we look at multiple time frames, we see this pullback into support. And now this is just beginning to try and make the turn. And we can go down to a smaller time frame and see, is it flatten out? Bar by bar analysis. Oh, red bar didn't follow through. Big green bar. Bottoming tail bar as it broke down. Buyers are beginning to step up. That's how you use price action in multiple time frames. See what's going on here. Even though this is down, it's coming into location where buyers should step up. So you start to look for the proof of that. Right? So moving up and a pullback creates a thought. Buyers should step up here. Do I actually see that they're doing that? I see the beginnings of it. Is it ready to go yet? Maybe. I'm not quite sure, but I see evidence that it's beginning to happen. Qs, right, a little stronger, right? A lot of days down here. Even with all the wild stuff going on, a lot of days down here. And so a little bit of extra strength, still pulling back, same story that we see everywhere else. Right? These markets, for the most part, they've been moving pretty well together. And just move this out of the way over here for now. Kind of, at the end of the week, right, at the end of today, we're not going to have any kind of great looking weekly charts. So, I've already mentioned that this damage being done is going to take several weeks, right, to get anything going. And the expectation still wouldn't be for a move to new highs. So that would be like, we'd probably have to hear news. Everybody, the bars are open. Go get your, virus shot. We're all good. And the markets take off. But so for right now, we're just looking for stabilization and some kind of retracement to attack resistance, and we'll see how far it all gets going. YM relatively weak, which it has been, down, right? Down the low down there, not on the close. Well, how can I move this? I think it's, yeah, in the area about 35% on the futures. But again, sideways, break lower, pop up. So, it's the beginnings of a possible turn with relatively narrower ranges and candle bodies. So turning moves, sustainable ones, to some extent, I said to some extent because obviously the trend has been broken, happen after you get range contraction. And we're getting that. Russell futures, right, holding here, right, and they look like they can get going, right? Not quite yet. Look, up, coming back down. This is the process, right, where it's got to just kind of get quiet down here. That's what we want. Bottoming action where things kind of get quiet and they move sideways away from the damage, right? So this is the damage. It violated this short-term trend. So now some sideways price action, breakdown failures, bottoming tail bars. We look for that evidence bar by bar as to a potential turning point to be a buyer. And we're waiting. We don't have it yet. I mean, in reality, it may keep going down and come down here to, this 1040 area. So we just sit here patiently and we wait for our pattern to set up. And, I look at it as just let the ultimate scalpers on the 20-second chart. I saw a guy, a video the other week with a 13-second chart. And I'm like, man, that guy is either out of his mind or he's super trader. It was like, anyway, that's somebody else that was teaching 13-second charts. It's like, this is insane. I'm just like leading the people to the slaughter with that. So we'll see if this can start to bottom out or whether it starts going sideways. Oil down here a little bit, stabilizing. Incredible drop in crude oil down here. The pumps, I guess, I don't know if gas stations, I guess they're still open, since I pretty much stay right here in my seat, glued to my computers. Anyway, bonds are starting to push back up here again. And we'll see how far that gets. And so as this moves up, interest rates come down. And let's just see where the 10-year is now. All right, so it had a huge move, right? Down below 0.5%, back up above 1.2. And now it's pulling back. But even at this point, it's been cut in half from where it was up here. So this was a tremendous move to the downside. And, to some extent, maybe this is, someone in the chat room the other day said that one lender was just refusing to do refinancing and loans. I guess they just knew that they were going to get killed with interest rates so low trying to repackage and sell them. But that's a tremendous move in a short amount of time, just like this was to the downside. And what else? Gold coming off the lows here, right? Maybe that makes a nice move up. It's a little sloppy. So ideally, whether it's the daily time frame or a 5-minute time frame, we like to see the ranges contract and like this kind of a pattern, right? We like to see this sloppy, breaks down, comes back up, trading sideways at resistance. Let me tell you, everybody, you looking at this thing, capture this chart. That is the money. Right? Of course, you have to understand multiple time frames, but this picture alone, if you understand multiple time frames, that is a money chart, because it is just the structure of saying accumulation is starting after a correction, right? I don't know what you'd call it. Well, you can call it a downside shakeout. You might call it a head and shoulders bottom. Who cares, right? I spoke to Dan yesterday about picking up shares in SMH. right? SMH was a leader to the upside, George, and it was acting really well. NVIDIA was acting well yesterday, so I think, if we really can get a turnaround here, which seems to be will happen, SMH, the weekly chart is a deep retracement. So I guess we'd have to call it sideways at this point, but it was a leader on the way up and the stabilization. And so I think that's one. I mean, we looked at a whole bunch of ETFs yesterday in the room. And we saw all these reversal points. So anyway, let's look at the transports. They're stabilizing too. They're right on this big support area. So we'll see what today brings, everybody. All yours, Dan.
All right, good morning. You were talking about banks. I was just looking at an article in the journal here, and it said the title of it was "Banks Have Nowhere to Hide," and it said the first paragraph was airlines are in trouble. Now it's the bank's problems. Restaurants are in trouble. Now it's the bank's problems. Oil is in trouble. Now it's the bank's problems. So, that's that and the low, yield, it's a perfect storm for them getting whacked too. All right. Yeah. I actually was, was nervous a little last night. We started adding some, put spreads, naked puts, but I made it very clear. We do not have a reversal yet. We don't. I said it in the video, said it in the green trading room. And so I just did not want to gap down to today's low here and then, make another, down 1,000 to 2,000 points. So I was encouraged to see the gap up here, but like I do with every single gap, I don't care about the number. I care about the chart. So I pulled up my spiders here and I'm like, well, it's gapping right to resistance. That's nothing to get excited about. I mean, it's excited that we reversed the -50 down, but if we were gapping here, sure, there's resistance to the left, but in terms of our bottoming scenario, and then we could take out a 30-minute high, then I would have felt so much better on adding to our put spreads. So now, so my point is, we've given up the morning strength, turning into the gap fill here. So I am neutral here, gonna chill. Maybe this is a perfect 30-minute high day. I thought someone was banging nuts upstairs. Let's see, YouTube has a question. Is it possible to leg into an Iron Condor with a put spread above the call spread or vice versa? Absolutely, Lou. We leg into call spreads all the time. The pattern has to support it, though. So an Iron Condor, this is not a good Iron Condor candidate. An Iron Condor, we start off with a call spread. I'm just giving you an example. And if you then want to leg into a put spread, to a condor, that means you would have to sell an out-of-the-money put spread. This is not a pattern to do that because it's a climactic sell setup. We only do that in wide sideways trends, or if, let's say, we sold a put spread on a breakout, whatever, and then it, had a false breakout, got slammed back into the trading range, then I'd be like, yeah, let's, sell an out-of-money call spread. But can you do it as one of our adjustment strategies? You better believe it. Do it all the time. But this is not a candidate with what we teach because everything is pattern-based. I sent out a text alert. We shorted this on the breakdown yesterday afternoon, the ETF. So I said move, stop, break even. And as an adjustment strategy, I said if it takes out a 5-minute high, let's sell the out of the money $56 puts, near the low here. And why did I say that? Well, if this is going to break out, I'll still hold my breath on my break even stop, but we'll sell an out of the money put to convert our short ETF into what's called a covered put, which is the opposite of a covered call. And we also initiated a way out of the money bear call credit spread for next week. Gustavo, what's shaking? So yeah, it was, another emergency congressional thing last night, bailout. It's still not passed. They'll be arguing about it all day. I still think there's going to be a lot of weekend risk for obvious reasons. The news, the continued, fighting with congressional, what's actually going to get inked. I had another email from an individual here today on COP. He says he shorted this because he just has a very strong belief that this stock is overvalued. And I just said, look, we're pattern traders here. This is not a bearish setup. It's a climactic buy setup. If you wanted to short this thing, look, beautiful, beautiful little Bear Island reversal, breakout failure, consolidation, boom on the gap down. That's where you shorted using master trader strategies. Not now. I mean, could it go lower? Sure. But it's nothing we teach. It's a climactic buy setup. All right, let's continue. All of our opens are fine with the gap up because we have 100% bullish positions, and it's not like we've been giving swing longs. We've just been selling this very high premium with new highs, record highs in the VIX, the XX, as I said, in stratospheric mode. But we've been just putting our toe in the water. I would say we're only, I don't know, 25, 30%, our toe in the water. We got a lot of ammunition left, but we were selling some crazy out of the money premiums on, not diamonds, Disney. We have $65 puts that expire today, worthless. Starbucks, we did the 35s. I mean, I've been trading 30 years, and other than the 2018, I have never seen premiums like this. What else did we do? McDonald's, we sold the $90 puts. Gustavo, were you around to see some of these trades? The 90s, folks. Sure, the market can go lower, but does anybody in this room think, of course, I never say 100% certainty, so don't, just keep that in your head. But does anybody reasonably think that McDonald's is going to close below $90, which is $60 away in 7 days? Does anyone believe that? Well, we took in 90 cents a share because we took that bet. What else did I do? We got lucky with these gap ups, DRI. Folks, we sold the $20 puts. I mean, those were priced for, and that's after it already cascaded from 120 and change. I still want to keep an eye on the beat up sectors, which are travel, casinos, restaurants, airlines, cruise ships, oil. Hey, hello, owner. Owner's typing to me. Owner, two things. Owners, I see them typing to me to all panelists. Hey, owner, where you're typing to me, please change it to all panelists and attendees, number one. Number two, welcome. Number three, your question is, where do you see opens? We have 3 open trade spreadsheets for our 3 advisory letters in members area. We do not have one in the green trading room because this is not a swing trading service. It's a live trading room. I give you all the adjustments in here intraday, but you don't have access to the spreadsheet unless you subscribe to one. All right, let's just chill here. We're doing nothing in the first few minutes, but the Qs did break down. Apple, we have a put spread that expires today. Microsoft, today we're short the 1 1/4 puts, and I also put on a new one yesterday, the 135s. So we need that melting ice cube. LUV, I sat through mine. I got some short puts that expire today, the 27.5s. But for new trades, the airlines are not ready. They They're not ready. They will be someday, but it's not this second. Silver, I mentioned as a put spread yesterday. In USO, I was mentioning also as a put spread idea. It's retracing a little bit more. Silver, Greg, I think I mentioned this to you yesterday. I actually did some myself, but with the gap up, it looks great.